Welcome back. It's time to take a look at gas prices and policies. Forum Daily's energy update with Dan McTeague from GasWizard.ca coming up next. Over to you, Dan.
Well, thank you very much for that, Nima. And again, a very exciting week on the energy front. These low prices that everybody has been enjoying, relatively speaking, by the way. I mean, who would ever think that average prices in Canada at about a buck 50 would be a bargain? But certainly a lot better than when you and I spoke back in early June, when the average price in Canada was a lot closer to 2.15 a liter. But I think these are things that we can't assume will remain forever. Yes, it's true this time of year. Gasoline production is fairly steady. Demand is steady. We shift over from, as of this week, from summer to winter gasoline, and that usually means a couple cents difference to the advantage of consumers, usually 3 or 4 cents a liter. But this is a market that is behaving unlike anything witnessed in the past 30 years since I've been doing this. And it's likely to get more convoluted, and I would say probably a little bit more chaotic as we head towards the month of December. I say December because that's when energy markets really have to decide whether or not the U.S. government can continue to supply the world with borrowed strategic petroleum oil, and as a result, try to keep down prices. Those that reserve has to be refilled. It's going to be refilled between $80 and $100 a barrel. That means that there will be upward pressure, not just in terms of price, but most importantly, demand. It's creating a demand. You've got to replenish that by law unless something can change. And I don't think that's going to work out very well for the Biden administration. At the same time, it's pretty clear that Europe is in a straitjacket. It has no choice but to burn oil and diesel in order to make up for the curtailment of natural gas coming from Russia. Of course, Canada refuses to provide natural gas directly, build any LNG projects. We saw that kind of farce with the Prime Minister, who sat talking about futuristic mumbo jumbo with hydrogen that won't be around for the 30, 40, 50 years, if at all. While Germany's needs are natural gas today, our Prime Minister, of course, said, we can fantasize about some kind of romantic technologies that can't be proven, certainly not without a lot of use of fossil fuels, and that being the case certainly with respect to hydrogen. That aside, I think over the next week, Nima, we're going to be looking at a circumstance where prices are going to start to shed off this volatility of up, 5% one day, down 5% the next day. Sooner or later, we're going to have to come to the realization that the Fed in the United States and central banks around the world are going to have to increase interest rates for all the borrowed money, for all the money printing that our government and other governments have been engaged in, and that comes at a cost. The reality, however, is that we are looking at a severe shortage of oil, diesel, jet fuel, heating fuel as we head into colder weather, and of course, natural gas and propane. So, with all that, gasoline prices inevitably will have to go up. I think that's going to be a lot closer to the end of October into November than it is now. For now, I think, and for the foreseeable week, let's deal with what we have ahead of ourselves. British Columbia should see about a 3-cent decrease. Alberta, not much of a change. Same for Saskatchewan, Manitoba. Ontario, look for prices to drop back to below $1.50, but to go back up towards $1.55 by week's end. So about a 5-cent increase. Same for Montreal. So they'll be pushing a little closer to $1.70 a liter. With the Maritimes, of course, even with their regulated prices, will have to inevitably throw in the towel and drive prices up probably about 3 to 5 cents a liter between now and next week. What that really means is that prices for this time of year, especially on the gasoline side, as they are starting to indicate going a little higher, it's diesel that I think is the one we're going to have to focus a lot more on. And that's because it is really a proxy, especially in the eastern parts of Canada. A lot of homes are heated with home heating fuel. It comes from the distillate family, and that, of course, means greater pressure on diesel prices, which inevitably lead to higher prices for gasoline as refineries try to shift away from producing things like gasoline. It'll leave it somewhat stranded, and it'll leave it in shorter supply. Bottom line is that we're still looking at very strong, robust demand for all fuels. The economies are recovering, perhaps too much. That's one of the reasons the Fed may have to respond by higher interest rates as we're seeing economic growth continue to beat expectations. We live in an environment, Nima, where good news is in fact bad news. So on the energy front, we'll keep you focused, going up a little bit this week. In the meantime, we'll try to ride this out for the next several days. We'll talk to you next week. Thanks for having me again, Nima.
All right, thanks again for that, Dan. Again, that was Dan McTeague, Senior Petroleum Analyst at GasWizard.ca. He is also the president of Canadians for Affordable Energy. Stay with us. Forum Daily will be right back with a look at the crypto world with Catherine Murray, host of The Buck Stops Here. Stay with us.